Good afternoon. Getting right down to business here. We're doing it live, doing more at 4 weekday afternoons right here in Southern California, right after Guy Benson at 3 and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money. We are live on the air on 790 KBC, streaming live online worldwide at kbc.com. The KBC app, the on-demand podcast, kbc.com, Apple, iTunes, YouTube, all of your favorite podcast platforms. Big, beautiful day in Washington and for the most part, on Wall Street, too, with the U.S. Senate today narrowly passing the president's signature tax and spending legislation, the so-called Big Beautiful Bill, a party line vote today and quite a session. It was the biggest overhaul to the tax code since 2017, passing by a 51-50 vote, with Vice President Vance casting the tie-breaking vote today. The market ended the day mixed as the president's big bill passed in the Senate, and Wall Street on the lookout for progress on trade talks. The Dow came in for a closing gain of 400 points at 44,495, putting it about 600 or so points below its all-time high. The S&P 500 coming off its record high, down 7 to 61, down just about to 61.98, and the NASDAQ down 167 points at 20,203. That index had started the day at an all-time high, pulling back 167 at the bell. Keeping an eye on what's happening with Tesla stock, which pulled into reverse today, down to $16.95 to $300 and change as the drama flared up again between President Trump and Tesla CEO Elon Musk. The president telling reporters today the administration will, in his words, have to take a look at deporting Elon Musk after the richest man in the world reignited the feud with the president over the Big Beautiful Bill. Elon Musk, of course, naturalized U.S. citizen, originally from South Africa, made several ex-posts over the weekend slamming Republicans over the Big Beautiful Bill, arguing that it was adding more to debt. Of course, Elon Musk headed up the DOGE Department of Government Efficiency for a while. The president snapped back on a social media post today claiming Elon Musk was upset about the bill eliminating the EV mandate and that, in the president's words, Elon would have to close up shop and head back home to South Africa. Well, changes for both the individual and corporate tax structure in this Big Beautiful Bill. The bill provides new tax credits for individuals by fulfilling signature President Trump campaign promises. The effect on the energy sector also could be pretty significant, especially after some last-minute changes. We'll discuss that on this program coming up within the hour. I'll talk about it, and I'll talk about it live with John KILDUFF, and again, Capital and CNBC contributor, prominent oil industry analyst. Also, it's going to be a big travel weekend this weekend, so we'll take a closer look at what that means to you at the gas pump. This bill has been long expected to phase out Biden-era clean energy tax credits, but the final Senate bill now looks to shut them down faster than expected. Also, healthcare in focus today, and some of the healthcare names got a big pop. The package is set to trim the government's Medicaid spending by about $900 billion in the years ahead. We'll talk about what's ahead for the medical front and more with Stephanie Ontiveros, Executive Director of SoCal Premium Healthcare, based in the San Fernando Valley. She'll be joining me live later this hour. Apple moving higher today. That stock's been on a roll lately following a report today from Bloomberg that Apple is considering using AI technology from startups Anthropic or OpenAI to power a new version of Siri. The price of oil, we should note, is hovering at around $65 a barrel today. Gold up about $2 at the moment at $3,352. And the cryptos pulling back a bit today with Bitcoin right now at 105,732, Ethereum at 2409, and Doge at the moment pulling back to 15 cents. Joining us live now, the one and only John NAJARIAN. Dr. J, as he's known on the major financial networks, author of It's Not an Option with his brother Pete, and co-founder of Market Rebellion. He's big on X too and has the laser eyes on following the cryptos. John NAJARIAN, thank you very much for joining us on this big day here this afternoon.
It's my pleasure. And I'm certainly going to stay tuned for when KILDUFF is on, because that guy really does know energy prices. And we're lucky right now that we've got energy prices, gasoline that is, at the lowest level in almost 4 years, I believe, right now. So that'll be interesting to see what John says about the future of those prices.
Fantastic. Well, John NAJARIAN, appreciate you joining us here. And, mercifully, energy prices have come down after that spike following the U.S. taking out Iran's nuclear program. And, of course, we're watching what's happening there very, very closely. But today, the spotlight on Washington, and looks like one of the uncertainty pieces of this puzzle has dropped off now. Give us your reaction to today's epic news and the market reaction we've seen.
Well, you're right. The bill passed, but just barely. And the question is now whether or not the House Republicans have enough votes to pass this bill if they want to. Of course, they may not want to because there have been some changes. There always are. It seems no bill goes straight through. And if indeed they decide that they would like a little less spending rather than as much as there is in it, about $3 trillion, that could be one of the things that either keeps the bill from passing or causes it to go back to the Senate with some adjustments that they might make in the House. But overall, obviously the Dow, as you cited, did extremely well today, 400-plus point rally, and a little bit of an ease out of both the S&P and the NASDAQ from their record highs, but certainly nothing like the sell-offs we were seeing after February 19th as we moved into the tariff tantrum.
On the air live with Dr. J, as he's known, John NAJARIAN. And John, the healthcare names notably got a pop today on all this. United Healthcare, more than 14. That's been a laggard this year, suddenly to 326. Humana, more than 8 at 252. What do we need to know about those moves and your thoughts on the healthcare sector and all this?
Well, obviously the president and his staff are really focused in on trying to cut some of those expenses in the healthcare sector. We saw a lot of the ETFs, the exchange-traded funds like the XLV and so forth. They were moving around pretty rapidly, basically trying to figure out what sort of things might be in a bill that actually passes both houses of Congress before it gets to the president. And there was some pretty bullish activity in several of the ETFs for healthcare today. So I think traders that are trading those stocks, I didn't really participate, but traders that are trading those stocks were pretty bulled up about what might be coming in the fall and into 2026 with those healthcare names.
All right, Tesla back in the spotlight on this latest dust-up between President Trump and Elon Musk, and Tesla stock pulling into reverse today, down about 17 to 300 and change. What about Tesla here? And, of course, the tech names have seen a tremendous run recently, with the NASDAQ today coming off its all-time high.
Yeah, anytime the president, the world's most powerful person, and the world's richest person decide to have a dust-up, it's something that is a bit like King Kong and Godzilla. I mean, people can't help but just pay attention and, in some cases, root for that fight. I suspect the people that are rooting for that are not the president's friends, but it is a very interesting matchup. Mr. Musk, of course, I think, speaking for many of us, would like to see a little less spending. He believes that the $37 trillion in debt that the United States is right now is unsustainable and should be clipped. But the president has been right about so many things. In particular, whenever the Congressional Budget Office or CBO or whoever it might be ranks whether or not his policies will increase spending or increase the debt, they've been wrong. So that's what the president fires back at Mr. Musk each time that Mr. Musk says, well, this is going to just, put us closer and closer to bankruptcy. The president says, well, all this good fortune will drive our markets higher, and thus people will have more money in their pockets and we'll be able to pay down the debt faster. We'll have to see which way that plays out, Frank, but right now it seems that the president has a better hand than Mr. Musk because, again, Elon, as great as he is, and I'm certainly a fan, there's J.P. Morgan was downgrading much of his production numbers this year, saying that they don't believe that he is going to be within 16, 17% of last year's numbers. That's not a good thing, obviously. And I think Mr. Musk probably, I have nothing against him or anybody else speaking their mind, but I don't think that we're seeing the best use of his time basically going after the president rather than trying to make sure that his company secures as many great deals, whether that company is the Boring Company, Tesla, SpaceX, whatever it might be, Neuralink. I think he should be focused on that much more than the big picture of taxes and whether or not a particular bill might pass the houses of Congress.
Maybe because he owns X, he's certainly on it and can't resist it. Can't resist putting his thoughts out there. And so it's an interesting drama that continues to play out. Let's get to some more of the exciting stuff here now. Cryptos, which you follow closely. Bitcoin hit a record high earlier this year, close to 112. We're at 105 now. It's pulled back in the last 24 hours or so. Doge, by the way, is down to 15 cents, and Ethereum at 24.09 here at last check. What are your thoughts here on the latest crypto moves?
Well, rather surprisingly, a number of analysts in the digital asset space have come out saying that they really favor Ethereum right now over Bitcoin at these levels. Bitcoin, as you just said, just a few percent away from its all-time high, whereas Ethereum is a far cry from its all-time high. Not that they always have to retrace. I'm not that person saying that. But I do think that there is an awful lot of value in Ethereum. The biggest struggle that it has is, of course, the gas fees, the fees that are charged instead of the miners in the case of Bitcoin, the people that have to approve these transactions and so forth. In the case of Ethereum, it's much more expensive than it is for Solana, which is why I've tended to lean hard towards Solana rather than Ethereum. But over the last little bit here, I must say I have been lightening up on Bitcoin and Ethereum. I'm sorry, Bitcoin and Solana, and leaning more into Ethereum as I take some of those recommendations to heart.
On the air live with John NAJARIAN. That's very interesting. And so you have a price target now on any of the ones that you mentioned?
Well, Ethereum, I think, under the right circumstances, could be 4,500 to 5,000 by year end. So that's nearly a double, of course. You mentioned it's in the $2,400-$2,500 range. A $5,000 price for Ethereum would be a double. I can't quite say that I see that in the cards for Bitcoin this year. Over time, yes, I do see Bitcoin going up substantially. But do I see it doubling this year? Not so much. I still have more or less a $140,000 target for Bitcoin in my mind and in our models. And we'll see if that plays out. But it's certainly not been a bad year for digital assets, in particular Bitcoin. And I think the digital assets will have a very good second half of the year now that we're in the first days of that second half of the year.
It should be noted, Bitcoin, looking at the 52-week range over the past year, Bitcoin has been as low as 49,314 and as high as just shy of 112,000. That is quite a range, and indeed for the year, this past year, up just about 77%. So that is to be noted. What about good old analog gold and the metals, especially platinum, which has popped above 1,400 recently? It's just below that now, but platinum suddenly took on a new shine this year. Gold, of course, also hit an all-time high above 3,500. It's around 3,352 here, and silver has had a good run, just above $36. Are you doing anything with those metals?
I am, but I'm really just, other than the actual physical gold that I own, I'm basically just trading the ETF, GLD or GDX, depending on whether we're talking about gold itself, which is GLD, or the miners, which I, at times of upward movement, I really do favor those miners rather than the physical gold itself. But I don't think anybody's going to complain about the run that gold has had this year. And for that matter, as you've said, certainly platinum and silver are looking like they are due to outperform perhaps from the second half of the year from where gold is at roughly just shy of 3,400 in the 33 to 3350 range.
Getting back to the crypto space, making news today, Circle, this is the company that has formally applied with the government to get a national trust bank charter. That's the stablecoin issuer moving higher today. That stock, by the way, is up 500% since its June 5th IPO. That's a pretty nice pop. But what are you following that one?
I am. And there are a host of others. You know, Tether is going to be coming as best as it can, along with many of the digital asset plays like the Winklevi that are now, because of President Trump, thinking about listing here with Gemini, their firm, versus, for instance, Galaxy, which that's Mr. Novogratz, and he's already listed in the United States. But under the former administration, it seemed that an awful lot of crypto innovation was going overseas. And now, and including, like I say, the Winklevoss twins, and now it seems like they're giving strong consideration to remaining or building a new presence here by virtue of going on the New York Stock Exchange or NASDAQ for a listing, which I think would be one of the positive things that would happen under this Genius Act.
On there live with John NAJARIAN, Dr. J, and you, of course, are famous in the option world with the book, It's Not an Option, with your brother Pete. Please say hi for us. It's been a while since we chatted with Pete, so please send our best regards there. And what about on the option front? Where's the action nowadays?
Well, for those of your listeners, and I know there are a lot that trade stocks, futures, cryptos, and options that are listening to Mottek On Money, they're probably aware of this. But for many of your other listeners that are listening perhaps more for business news than for actual trading, we're going to have half a day on Thursday, no trading at all on Friday. So to me, and I think to anybody, again, in that first category of active traders, they know that that means we're going to have time decay without much trading, because Thursday's trade will be very light. It'll be, interns and just a few traders on the major floors in New York and so forth and around the world that are sending orders in to the United States. Most of the people will already be on vacation before we get to the Thursday trade. And again, just half a day, just till 1 o'clock Eastern time. So that's 10 o'clock Pacific time. It's a very short time frame, and it means that we're going to see a rapid amount of time decay on Thursday. Friday, of course, when we don't trade. Saturday, no trade. Sunday, no trade. So it's going to be a time when you need to be aware that options decay is very fierce as you go into a long holiday weekend. So if you do have options, be aware of that.
That's an excellent point. Thank you for sharing that. And let me ask you the final big question here, John NAJARIAN, any specific places where you are putting money now and or taking it off the table?
Well, a number of those stocks in the United States that are in the clean energy space, like First Solar, FSLR, are seeing a lot of interest because as much as the bill does not favor Chinese solar companies, it does seem to have a real lean towards American-made solar panels and assemblies for transforming basically solar energy into electricity. So I think ENPH, Enphase, and FSLR for solar are two that you should watch based on how this bill moves through Congress. As we've already said, it's moving into the House of Representatives next. And if they pass it and it has positives for those two companies, I think they will continue to react very positively to that news.
Well, fantastic, John. Thank you very much. You're a great American. We'll watch what you're doing on X. Also, catch your podcast. It's not an option. And thank you very, very much. We wish you a great 4th of July holiday weekend. And I look forward to speaking with you again very, very soon. Thank you very much for taking the call here on this big day today.
Of course. Thank you very much, Frank. And have a very safe and happy 4th of July, everybody. Thank you.
Thank you very much. Thanks very much, John NAJARIAN. Dr. J, as he's known on the major financial networks. Again, the book is It's Not an Option with his brother Pete, co-founder of Market Rebellion. He's big on X2. And right now, let's get out to the freeways here on 790 KABC. Mixed finish for the stock market today on this first trading day of the month of July, kicking off the second half of the year. The Dow coming in for a closing gain of 400 points at 44,495, just about 600 points below its all-time high. The S&P 500 pulling back 7 from its record high at 6,198, and the NASDAQ down 167 at 20,203. That index, too, had started the day at an all-time high. The yield on the 10-year note now at 4.24%. Right now, Bitcoin up about 300, back to 105,700. Ethereum at 2409, and Doge at the moment at 15 cents. We see gold hovering at 3,352 and change, platinum at 1,370 and change, silver at 3626. Among the winners today, the healthcare names: United Health up 14 and change to 326. Humana up more than 8 at 252. Nvidia pulling back down nearly $5 at 153 and change. And now the latest news on 790 KABC.
Mic Drop, hosted by former Navy SEAL Mike Ritlin. It's raw.
Any single time that you left the wire, you could lose 4 guys.
It's unfiltered.
That was the most horrible screaming I'd ever heard. Taking a hit on the chin, you want to pay it back?
It's tough talk from the top minds in their field.
Would I choose to not do our duty as military fighting men? No, I would not make that decision, without question.
Mic Drop. Follow and listen on your favorite platform.
Mottek On Money continues here on 790 KABC. Despite the upheaval in the Middle East, the price of gas heading into the 4th of July holiday weekend is the lowest we've seen in about 4 years, the lowest since 2021. With the price of oil hovering at around $65 a barrel, we see the average price for regular gas in the Los Angeles area, $4.58, and that's 20 cents a gallon below where it was a year ago. Diesel, by the way, at $5.09 a gallon. That's a couple of cents higher than where it was a year ago. Latest news in the Middle East. We're following the latest headlines. Yemen's Houthis claim a new missile attack against 3 ships there. Also, Israel's defense chief is threatening to retaliate for Houthi missiles. And the U.S. ambassador to Israel, Michael Huckabee, says that U.S. B-2 bombers, in his words, need to visit Yemen after Houthis' missile strikes. Joining us live now, tracking all this closely with us, is oil industry analyst John KILDUFF, again, Capital and CNBC contributor. And John NAJARIAN says hello, John. We just had him on the show here a few minutes ago. Thank you very much for taking the call here this afternoon.
Thank you, Frank. Yes, Johnny, great guy. You have all the celebrities. I don't know how I sneak in here all the time, but thank you, Frank.
You're terrific, John. Thank you very much. And certainly you're following all of these latest headlines as we are here coming out of the Middle East. Looks like the ceasefire between Israel and Iran is holding. And that certainly brought the price of oil down since we last spoke following those dramatic developments. Give us your view of what's happening right now.
Yeah, very much so, Frank. The ceasefire is, in fact, holding, I think, because the Iranians, in part, are desperate for it to hold. They're going to continue to talk a big game. They're probably encouraging the Houthis to do what they're doing. Although, boy, the Houthis have some chutzpah, as we say out east here, to do that, given what the assured response will be from Israel and or the United States now at this point. So I wish them luck with their endeavors in that front, but I don't expect them to have any success in impeding marine traffic, and certainly not oil flows in the region one iota, and that's why the oil market has barely reacted to that. I will say, Frank, though, the word we both use, I think, is it's holding. It's fragile. It's a fragile ceasefire. So that's why you're not seeing oil prices necessarily get much down below the $65 a barrel level that they settled in at here for WTI. I will tell you, though, that there are hopeful signs that there's going to be more downward pressure on prices, that the Saudis are really ramping up their exports, and that's at a time of year for them where they do a lot of their own burning of crude oil to fire up their air conditioners and things like that for electricity. So right now, the tilt remains to the downside. The market just has to get over the trauma of what we've been through. And everyone and their brother throwing around the concern about the Strait of Hormuz potentially getting shut down and oil flows being impeded. They're not going to be. It doesn't appear. So the trajectory for lower gasoline prices for everyone is in the cards.
Certainly a lot of wild cards in that deck. We're on the air live with John Kilduff, prominent oil industry analyst, again, Capital and CNBC contributor, longtime contributor to this program. Were you surprised by the fact that oil didn't go through the roof following the wiping out of Iran's nuclear program?
I to a degree, Frank. To a degree, I feel like in the oil market we've seen this sort of movie before, where there's all kinds of existential or threats posed to supply. On this one, I think for those of us who have been around the Iranians as I have for a number of years, I just didn't see it happening in terms of them shutting down the Strait of Hormuz. As you and I talked, recently about this, the neighborhood has changed a lot there in the Middle East. The Iranians and they've lost the protection of Syria. Their proxies are degraded. They have a great customer in China who buys their oil through thick and thin, sanctioned or not sanctioned. Does exact a heavy discount for it, but it keeps both parties very happy. So by cutting off the Strait of Hormuz, they would be impacting China because of what they would do to the price of oil and supplies, but also they cut their own nose off to spite their face because everyone's heard about Karg Island now, I think, which is the major Iranian export facility. All those barrels go through the Strait of Hormuz. So I think while it's a scary thought, and certainly if they had reached a level of desperation, Frank, that they thought they were enduring or even being capable of pulling off, they would have tried to make some kind of run at affecting and impeding marine traffic oil flows. But look, the Israelis really have taken it to them over the past year, really, degrading their missile defenses, degrading their air defenses. The Iranians were just flat on their back, and the Israelis walked in. And that was the real reality of the assessment of the situation, which is why I think the oil price spike was measured.
And so we're looking at oil now hovering around $65 a barrel. You said you think it's going to be going lower. Do you have a price target on oil here and also gas prices at the moment?
Yes, Frank, I do think we'll see oil prices quickly trade back down towards $60 a barrel for WTI, probably maybe a couple of dollars lower, and that should translate into another 25 cents or more lower at the pump, really across the board, even in California, where they try to keep taking back those declines and those discounts with taxes and things. But seriously, no, I think you should see more relief at the pump and lower oil prices ahead.
That is encouraging news, and of course we're paying the highest in the country here, even higher than Hawaii, which is in the middle of the Pacific Ocean, so and largely due to taxes, of course. We're swimming in oil here in California, as you well know. What about on the investment front? There was a report, about a week or so ago that Shell was going to acquire BP, but Shell has since denied those reports. What do you see ahead on the possible merger front, as well as any investment opportunities in the energy patch these days?
Yeah, I've been expecting BP to be a takeover target for some time now. They never really recovered from the oil spill back in the day in the Gulf of Mexico. Their financial position, capital position has always been very challenged, Frank. They don't necessarily have the capital to be able to expand and enlarge their production portfolio the way they should. They have great technology, though, great people. Their assets that they do have are terrific. It makes all the sense in the world for them to merge. So that will happen, I think, before the end of the year, and I think people should be taking a look at BP on that basis. I will tell you that what has been happening recently with the Iranian situation in particular really put a punctuation point on it, is that the U.S. refiners, their profit margin of turning crude oil into gasoline and other fuels has gone through the roof. They've all rushed out, and I've seen them in the market hedging that, meaning that they've locked in those enlarged profit margins for the foreseeable year or so. actively in the market. So they're going to be a good spot to hide out, and that their earnings are going to surprise, I believe, to the upside. Because if you're just watching the real-time prices, you're not going to necessarily acknowledge, if you're just a tourist in the sector, these hedges that'll kick in and bring money to the bottom line. So I'm loving, Marathon. I'm loving Valero. And even ExxonMobil with their big refining portfolio. This is really going to help them. I will say, though, the sector is going to be challenged if the oil prices do bear out my prediction, go to 60 or below. The outright price will get hurt, Frank. I can tell you the big majors like Exxon, Chevron, and the rest really will maintain their dividend. There'll be a great yield. The yield will only get better as the price of the stock goes down. So that's something to watch out for, too. You should jump all over these stocks if prices of the oil goes down and drags down the stock prices with them, which it will. And my favorite continues to be Diamondback Energy, which is FANG, which has a natural gas component to it, which all the talk of AI and electricity demand, the secondary trade to sort of profit off that is to get into the natural gas game. Exploration and production companies, producers of natural gas, are going to benefit really terrifically, because natural gas is going to be badly needed, Frank, and it's going to be coming relatively short supply. We're already seeing the price tick up ahead of what's happening. And, of course, the LNG exports from the United States, another big demand source here for the commodity, pushing the price up.
Terrific, John. Well, thank you very much for that very thorough assessment as always, and we appreciate it. We wish you a wonderful 4th of July holiday weekend. John KILDUFF, oil industry analyst at Again Capital, CNBC contributor, and greatly appreciate your contributions here. John, thank you very much for taking the call here this afternoon.
Always a pleasure, Frank. Thank you so much.
Thank you very, very much. And out to the freeways we go now on 790 KABC.
Jim Rome takes on sports.
Why? Because you're not playing me.
With rapid-fire takes.
And a lot to get to, and I'm not sure you're going to like all of it. Honestly, I don't even care if you like all of it or not. I have a job to do.
Scorching debates.
On any given week, you have lots to beef about. Take advantage of it. Get up in here.
He's the Spitfire of sports smack.
She's not my fault. We will get to all of that.
The Jim Rome Show podcast.
Get up in here, and we'll beef later on. What's your beef?
Follow and listen on your favorite platform.
You've been warned.
Mottek On Money continues here, 790 KABC. Good afternoon. The big, beautiful bill that was passed by the Senate today now goes over to the House. And health care, a big part of all of this, and they're still hashing all of this out. The overall package is expected to trim the government's Medicaid spending by around $900 billion in the year ahead. And the bottom line for patients, according to an assessment from the Congressional Budget Office that came in over the weekend, is that nearly 12 million additional folks would become uninsured by 2034 because of the health care provisions in that bill. Certainly health care availability and affordability, big issues, especially end-of-life care. And joining us live now is Stephanie Ontiveros, who's the executive director of Southern California Premium Healthcare, also a hospice care expert based here, and also an expert on the financial aspect of healthcare, getting lots of attention these days. Stephanie Ontiveros, thank you very much for coming to the line here this afternoon.
Hi, good evening. Thank you so much for having me.
Wonderful to speak with you. Stephanie, give us your initial reaction to what they're talking about in Washington, and your thoughts about what's ahead and how it's going to be impacting folks here in Southern California.
Well, there's a lot going on, and we also have to think about the open enrollment coming up in November. So a lot of our listeners and members are thinking, with these new proposed bill, what is going to happen? What's going to happen with our parents, and what can we do? So taking everything into consideration and the cuts that we're going to be seeing in the coming years, it's also a little frightening to think, because we're going to become a more Medicare-dependent society rather than contributions as we were in the last 10 to 20 years. So all of these policies can create a lot of confusion, but a lot of things that we should take into consideration is, especially something like hospice is not something we plan for, right? It's not something we want to think about. But when we do have to think about it, we're scrambling, and the last thing we want to do is have to have restraints from our federal government, which is, again, disheartening, because we're all taxpayers, we're all part of, law-abiding citizens who deserve these benefits. And when it comes to hospice and serving those in need, we want to die and have our loved ones die with dignity and comfort and care. So Medicare acknowledges that. And we save, as hospice providers, we save Medicare $35 billion a year just providing at-home services, which actually goes underused. So what does that tell us? That they have to consider hospice and end-of-life care and Medicare services all around as a big factor, not just a line shift here to consider through their bill. But a lot of this impact will happen to rural areas, a lot of senior dependent communities where we're going to see these, crunching numbers being affected. And also, not to mention, they want to have seniors have work and reporting requirements. And you can't work and be reporting and be eligible for Medicaid when you're chronically ill and sick and need these services. So when all these changes are happening, we also want to consider what type of health plans we have. So a big thing to consider is the type of managed care plans that you have in your area and seeking the services that they're still qualified. Because as you know, Southern California is very different to another state. So to our listeners who are seeking services or planning for these services, it's also good to inquire before you start making changes what is going to be covered and what services am I allowed to seek when that time does come.
Yeah. Tough decisions have to be made at some point. What is your guidance when families have to make that tough decision? Nursing home or hospice care, palliative care, how do you guide the folks in making those decisions?
So as I mentioned, it's not something we want to think about, and statistically, many of us don't plan for it. But when we are approaching this time, hospice definitely goes underused, and it's not something we want to leave at the end. And not just figuratively, but we want to think, how do we want our loved ones to go through this difficult time? And it doesn't just affect the patient itself, but it affects the family as a whole. Because families are the ones who ultimately become their unofficial caregivers. You know, we have the eldest son and, the family coming together to take care of mother or their grandparents to.
Huge topic. I wish we had more time, Stephanie, and hopefully we'll get to speak with you again as we follow this very, very closely with you. Stephanie Ontiveros, Southern California Premium Healthcare Executive Director, based in the San Fernando Valley, hospice care expert, based right here in Southern California, SoCal Premium Healthcare. Thank you very much, Stephanie Ontiveros, for joining us live here on Mottek On Money on 790 KBC.
Nightly Scroll with Haley Carania.
Hello to all my homies in the chat. I'm Haley Carania with some very inconvenient truths.
Your go-to place for the hottest button issues.
Don't you hate when facts get in the way of a good news story?
Cut through the noise and get ready to scroll through the chaos of the modern world, one hot take at a time.
Hear me out. We might need to spread this information 24/7. Let's get into some scrolling time.
Nightly Scroll with Haley Carania.
I love this place.
Follow and listen on your favorite platform.